Yo, what to do, my YouTube fam, or my TikTok family? It's your boy ZayEsco back with another video. Today is 12/31, 2025, so it's New Year's Eve. I thought I would end the year with a bang for you guys. I'm basically showing you how to trade the opening range break. But before we get into that, a little disclaimer: this is not financial advice. I am not a financial advisor. Anything I say in this video is not guaranteeing that you will have financial gain in the markets. This is just showing you how I trade every day. But without further ado, let's get into it. So what I'm trading, well, I ain't traded since December 23rd, but what I'm showing you today is gold. This is the 1 minute chart, and I trade futures. So it's GC on futures, but it's the same thing. It's all gold, you feel me? But the way I would get started is basically looking at the opening range. So the opening range could be the first 5 minutes of the New York session. It could be the first 10 minutes, first 15 minutes. It's all to your own discretion. Me, I like to use the first 5 minutes. So I'm Eastern time, so that's 9:30 a.m. for me to 9:35 a.m. So what I would do when I open up my charts is basically go over here to the side. This is top step, by the way. I will go over here, click my rectangle, and I'm gonna mark out the high and low of 9:30 to 9:35. So where's 9:30? Okay, boom. There's my 9:30 candle, and you can see it's at the bottom. 9:35 right here. So boom, we're gonna get the top of that. Bring this down a little bit. So boom. Now we got our high and low for 9:30 to 9:35. This is the opening range. This is where we're gonna base our trades off. So usually I like to slide this to the end of the day with futures. On top step, you have to stop trading at 410. So that's what I'll usually drag this all the way out to. But we ain't gotta worry about that right now. Let me type in opening range. So what I'm looking for is price to break out to the upside of the opening range, or price to break to the downside of the opening range. Now, most of the time, people will tell you to look for a 1 minute fair value gap, which is true. But when I take these trades, I like to also see that it's a 5 minute fair value gap being formed for like my confirmation to know, okay, you need to stay in this trade. The 1 minute fair value gaps is just entries for me. So a lot of people get messed up in the markets because they think just because it breaks outside of the opening range, that means that it's going to continue. That doesn't always mean that. Because if I take a look right here and look at these candles, technically this broke to the upside of the opening range, right? But it didn't continue. You see price reverse. So beginners are people that just wanted to rush the trade, would have been like, oh yeah, wait till this close, got in. As soon as they got in, boom. You know what I'm saying? They gone. Let's say you had like a four point stop loss, right? We're gonna be conservative. We're not gonna go too crazy. Let's do like a 1 to 3. So if I'm looking for a 1 to 3 trade, right? You already lost. You know what I'm saying? You waited for that candle to close, got in on your little entry, and you immediately got stopped out, right? So now you're asking, well, don't that look like a fair value gap? No, this is not a fair value gap, people. And this is how the market tricks you. It got you thinking like, oh yeah, you see this momentum candle. This candle got a lot of momentum. It looked like a possible fair value gap, but it's not. That is not. These 3 candles are not a fair value gap. This right here, this is a fair value gap. You see the space in between these 3 candles? You see the wicks? That's a fair value gap. I can go right here. This is a fair value gap, right? You see what I'm saying? You see the difference in this? Let's clone this real quick. You see the difference in that and the difference between this? You see how this candle overlaps into that, but this candle did not come down? You know what I'm saying? It's not clear space in between these. Even with this first candle, this wick is not inside of this body. You know, it's below it. So technically, this is not a fair value gap. So that would have been a terrible entry. Terrible entry. You feel me? Like, you got to pay attention to these. And this is what I mean by don't rush trades. You just got to take your time. Watch the market. Let the market play out. Take what the market give you. Don't force it just because you want some money, because that's not how this works. Okay, now let's go down. You see at the bottom of you see the bottom of the opening range, right? Now this is a fair value gap, right? So you would have thought, oh, let me get in this. No. Why? Let's check our 5-minute chart, which is a higher time frame. You see why I marked that fair value gap out, right? Do you see a possibility of any 5-minute fair value gap being formed? Can these 3 candles, because technically this candle not right there, but with these 2 candles, could you see a fair value gap being formed with the next candle? No, you can't. Why? Because look at this long wick. Like, look, it's wicking out on both sides. It's no way you could have seen a fair value gap being formed on the 5-minute, right? So you know now that cancels out another entry. So that's one entry that you wouldn't have took. You definitely wouldn't have took this because it wicked out and closed below the opening range. This gave you a fair value gap. No, I lied. Damn. This was a fake fair value gap. My bad. So you had a wick out, a fake fair value gap, and then you finally got a real one. But when you check the higher time frame, you seen that it didn't correlate. So again, that is not an entry. That's how people get stopped out the market so many times. Just wait, be patient. So boom, we got another break, right? Boom. Is this a fair value gap? No, this is not a fair value gap. So if you would have seen this, you would be like, oh yeah, that looked like a fair value gap, because you're not paying attention. You're not really looking at what the market is giving you. That's not a fair value gap. So once again, you would have been in a bad trade. Yeah, price went down, but this is not a good entry, bro. It's not at all. Not in no way, shape, or form. Look at this. Didn't I say you have to look at the 5-minute for confirmation? Is the 5-minute showing you a fair value gap? No, bro. This is not. Why? This wick and this wick? No, there's no space in it. There's no space in it at all. So technically, you had no reason to get into a opening range break trade. But now, let me show you something. Let me pull this out. Let me zoom out a little bit. And let me ask you, what do you see in the market right now? Like, if I had to take everything away from you and the only thing you had was the opening range, what do you see? Do you see anywhere on this chart where you could have possibly got in a trade and it would have been a legit smash? Oh, you good. Perfect entry. You know what I'm saying? Everything was perfect. So I gave you a second, right? All right. So let me tell you what you should have done. Okay. Let's take a look at the first breakout, right? Do we notice any pattern here? Do we see anything of value? Yes, we do. We see a 1-minute fair value gap. Clear space in between. Let me drag this out a little bit. Clear space in between. So what we're gonna do? We're gonna mark this as the 1-minute fair value gap, right? Stretch it out a little bit more. Clear, clean cut. All right. So what we would do in that situation? We would went to the higher time frame. What does the higher time frame? What does the higher time frame say? That's the 1-minute fair value gap, right? All right. So what is this? Okay. We're getting somewhere, right? That's a 5-minute fair value gap right after the 1 minute fair value gap. And what did I say? We need to see correlation, man. We need to see a 5 minute fair value gap being formed right after the one. Right? That's what we're seeing, right? So boom, let me 5 minute fair value gap. Boom. All right, let's go back to the 1 minute chart. Let's see if we seeing the same thing. Okay. What did price do? If I'm looking at this correct, right? Right after we seen the 1 minute fair value gap being formed, we seen the 5 minute fair value gap being formed, right? What did price do? Price then broke below the 5 minute fair value gap, and it came back to do what? It caught all the people trying to get the opening range break, right? It killed all of them, took their stuff clean out, right? Came right back to the 5 minute fair value gap, and it rejected. You see it wicked out. What did it do? It rejected the 5 minute fair value gap, showing that this is a strong fair value gap. It's strong. Now, if I would have took my entry and said, hey, let me get in that. Me, I like to do like 4, maybe 3.5. Say 3.5. 3.5. That's crazy, right? That looked like a pretty good trade. Now let's say I did like 1 mini, right? Let's say I'm trading 1 mini. At the highest, it went to 20.6 points total. With a mini that's like $2,000, right? With 5 micros, that's a little less, but you know what I'm saying? You get the point. You get the point. And this would have been a clean trade, no real drawdown. I mean, you would have been a little bit of drawdown, but you wouldn't have been that scared, you know, because you took the trade from a pullback off of a fair value gap. And what it do? It broke below the opening range and kept going. So for everybody that got stopped out at the opening range, you good. You good. You ain't stressing nothing. You out the markets. Cause me, I normally like to go for like a 10, 5. You know what I'm saying? That's like 1,050, maybe even a 15. You doing the combine, you get your little 15. That's 1,500 if you trade in minis. Now I only like to trade 1 mini. I ain't on that crazy stuff no more. But literally, that's 15,000. I mean, I said 15,000. That's $1,500, and you out the market. At the highest point, 2,000. You out the market. You feel me? Like, good trade, and you didn't fall for the market fake outs of the opening range. Now let's go back a little bit. Let's go back to yesterday, because I want to show you guys a real example of a opening range trade. Okay, so boom, and I already got it marked out for you. So what you see right here is a clear opening range break. What do we have right here? We have a 1 minute fair value gap that was formed. We got clear momentum. You see how big these candles are? Clear momentum showing you that price is trying to go to the downside. That would have been my entry right after the third candle close. Well, not after the third candle. I got in after the fourth candle came, and it came below the closing of the third candle. So that would have been my entry. So what we have here is a clear, clean cut opening range breakout trade. You can see right here, 1 minute fair value gap was formed. We see clean momentum. Like, this is good momentum showing you that price is going to the downside. My entry would have been on the fourth candle. This is the close of the third candle. So basically, I would have got in right after the fourth candle went below the third candle that closed to form the 1 minute fair value gap. Once I seen confirmation on the 5 minute, that's when I would have got into. You ain't gotta necessarily wait for the 5 minute candle to close. You just have to see that a 5 minute fair value gap is being formed. If you can see it being formed, you're good most of the time. Majority of the time, 90% of the time, I be good. You don't have to wait, because if you wait for the 5 minute fair value gap candle to close, you probably gonna miss half of the move. So I normally just wait until I see it being formed. Once I see that, now we get in. But this clean trade, bro. Clean trade. If I put my box right here where the entry was, I'll say 10.5 out the markets, bro. But 3.5, it's like a 350 stop loss on the mini. I'm out the markets. Literally. No drawdown, no nothing. If I wanted to go for a 15, I could have even got my 15. Clean trade. Fair value gap on the 1 and the 5. We got our entry. It broke outside the range. What more do you want? Like, what more do you want? I just gave you 2 examples of what not to do with the opening range. And I gave you an example of what the actual opening range trade looked like. So the first trade was you avoiding the fake outs, but you seen the move before the fake outs. This trade was a clean opening break. It broke the range. You got in on the fair value gap confirmation. Boom. You know what I'm saying? These are the only things you should be looking for when you trading the opening range. A 1 minute fair value gap confirmation will be my 5 minute fair value gap being formed. You do not, I repeat, you do not have to wait for the 5 minute candle to close. You should just be able to see that it is a 5 minute fair value gap being formed after you see the 1 minute. After you see your 1 minute fair value gap, please, I repeat, look at the 5 minute and see if a 5 minute fair value gap is being formed. That is a way you fake out. I mean, not fake out. That is the way to avoid the 1 minute fair value gap fake outs. Because again, the higher time fair value gaps hold more weight than the 1 minute. Go enjoy y'all New Year. Again, I won't be trading until like January 5th. So I'm not even worried about the markets right now. I'm just doing my markups and journaling stuff. It's time to get it, man. The money is out here. You just got to go get it. You feel me? But thank y'all for watching. I hope you learned something today. If you did learn something, make sure you click the thumbs up for your boy. Or follow, subscribe, whatever you seeing this on. Hit your boy up. And I guess until next year, I'm out there bit, man. Peace.